And if you're someone who can't fathom putting money in and then tomorrow it drops 20%, 10%, and you're like, oh, and pulling money out, you're gonna be pulling at a loss, right?
Yeah.
Stocks aren't for you.
Hi, welcome to Coffee with Confio. I'm William Freitas, and today's topic is investing in the stock market, especially after the coronavirus. Today we've got Eti Amegor back on the show. We've had Eti in the past. We love having him on the show.
And I love being here.
Thanks for coming. Yeah,
No problem.
Mate, it's great to have you because we're going to chat to you about investment.
Yep.
You know, our last episode that we had, which was episode 13, I think, or episode 14. Go back and have a look at that one. That was around superannuation, particularly because of the coronavirus, and being able to pull that out early.
That's right, early access scheme.
But we want to talk to you about investing and investing on the back of COVID-19.
Yeah.
The market has hit a pretty big low, right? So there are some people out there who are like, okay, we want to invest, like we've got some cash, we want to jump in. Is now the right time to invest?
Well, in essence, fundamentally, yeah. I mean, we've seen this whole COVID-19 situation really dislocate the markets. The markets have dropped in excess of 30%, right? And that's globally, you know, the S&P and also obviously the All Ords and ASX here. And there's also some businesses, some companies which have dropped out 70% plus, right? So yes, there are going to be some really good value stocks out there, right? But at the same time, this isn't, you know, it's not a time where people who've never been in the stock market before all of a sudden just start betting their whole life, you know, on the markets. You shouldn't do that. You know, it shouldn't work like that. You should take in some consideration and really be smart about it. Okay, so I mean, I can obviously talk all day on how you could do it, but a few points which I always like to say is, number one, you've got to be able to stomach volatility. Right? Because right now, yes, there are some good value stocks out there, definitely. However, this has been the highest volatility period in a very long time, right? So you may invest in a stock right now, drops 10% one day, up 20% the next day. You know what I mean? And that's what's been happening. Volatility is like this.
Yeah,
right?
and so like put in layman's terms, for those who don't know much about investing, volatility is, I guess, the pendulum, right? It's the difference between the low and the difference between the high.
Exactly.
And we're seeing a lot of volatility now in the market where you'll see a stock tank hit the bottom and then hit the top quite quickly, or should I say, there's a lot of variance between the stock price in a couple of days.
That's right. So you need to be able to stomach that. And I guess the markets or the stock market is there's a lot of people who are emotional investors in the stock market, hence why we see these swings. And if you're someone who can't fathom putting money in and then tomorrow it drops 20%, 10%, and you're like, oh, and pulling money out, you're gonna be pulling at a loss, right? Stocks aren't for you. Like if you can't stomach that, like it's probably not the best time for you to start putting, you know, some hard-earned money in there. And I guess another thing as well is don't try and time the bottom of the cycle, right? A lot of people, especially now, are thinking, okay, when's the bottom? Because in theory, the best time to ever invest in anything is at the bottom and then you sell at the high, right? That's just, you know, investing 101. But good luck trying to find the bottom of this cycle. Good luck. You know.
And I think it's such sound advice because I find a lot of people going, oh, it's hit the bottom. Well, you don't actually know if it is the bottom, right? Like who's to know it is the bottom? Who's to know it won't go down further? So what I'm hearing is you're saying, yes, it's a good time to invest, but can you stomach volatility? Because you can lose a bit of money if the market goes down even further.
Yeah, that's right. And I guess to further on in terms of the bottom of the market, I mean, historically, you can only actually see the bottom of the market once it's already happened. You know what I mean? Like you can look back and go, okay, that was when things turned around. So it's really in hindsight you can actually see the bottom of the market.
Yeah.
Not even Warren Buffett can literally just be like, next week that's going to be the bottom of the market. Everyone buy on that day. Like, you know, it's just not going to happen. So if you do want exposure, there are a few ways to sort of get exposure through these times. For example, you can sort of stagger your investment outlay. So just say if you have $1,000 that you want to put into the market, maybe break it up, 5% across 2-3x, whatever it is, right?
Yeah.
Just so you can really diversify your buying prices, and also you can mitigate a bit of risk as well, and you can ease cash flow, because right now cash is king in this market. You never know what's going to happen tomorrow, right? So,
correct. And having cash there is that security, and then the timing, it comes down to timing. When do you use that cash or not? But I'm concerned. Like, I'm going to be honest. We've said yes, you should invest, but I'm concerned because I'm seeing people invest who don't have investment experience, right?
Yeah.
So I want to get your thoughts on this, and to everyone out there, we're saying yes, it's a good time to invest, but we don't actually know it's the bottom. There could be some volatility. You could make some losses. I'm seeing people who are like investing, losing 5% and sweating, watching their stock, I think Warren Buffett puts it perfectly. They're the people that shouldn't be investing.
Yeah, or maybe they've just got exposure to the market in a much riskier way. Because there's a lot of ways you can get exposure to the markets, right? So if you're a first-time investor, there are things like ETFs, or index funds, right? So I think right now, like one of the Vanguard index funds is one of the most common buy vehicles in this current market. So, and I guess an index fund, essentially you're essentially buying the whole market, right? So you've diversified your risk and you're buying the whole ASX or Lords, whatever you want to call it. So you could do that, because that's a lot less risk than buying one stock. You know what I mean? Yes, high risk, high return. You buy one stock and that stock goes up 50%. You've made 50% in your portfolio of a one stock portfolio. But if that stock goes up 50%, you've got 200 stocks in your portfolio. You got the ASX 200 index fund. Then your portfolio isn't going to really capture a lot of that uptick. So. ETFs, index funds, managed funds, right? And you can get them for really, really cheap, and you've got exposure in there. So you don't have to really stress too much and watch one stock every single day. Oh crap, it's going up. Oh crap, it's going down. You're like, all right, look, the market's sort of up, the market's sort of down. Okay, that's fine, but this is a long-term game. I'm just going to let it sit.
So that's your main advice. It's like, it's long-term investment, right? It's not sweating over what the market is doing day to day, because that's what I want to ask you. Like, obviously our listeners are small business owners who might be in a position with a bit of cash to now invest in the stock market and capitalize on it, right? Now, what's a couple of quick tips, just things to look out for companies are investing into, or should they just buy ETFs and index funds?
Well, again, I mean, speak to your financial advisor, right? Not professional, because again, everyone's different. Like in my portfolio, I've got a managed fund, I've got ETFs and single stocks as well. So I've sort of got a mixture of everything. I'm fortunate enough that I have a higher risk tolerance. I'm able to have a riskier portfolio, but again, this is where you've got to speak to a pro, because I don't know what your risk tolerance is, right? Now, in terms of if you are going to go into a single stock portfolio, if you are going to go into a single stock or a small group of stocks, right now, the best sort of companies to look out for are companies who have great management teams. And when I say that, make sure the management teams have a history of number one, not lying to the people, not saying they're going to do one thing and then end up doing something else, or they're doing some creative financial statement or balance sheet, things in their portfolio in order to make it look like things are going
pushing
well.
Accounting standards,
you know what I mean. So make sure they're trustworthy and they can really push through these cycles. Number two, a lot of cash on the balance sheet. I'm a big believer in net cash balance sheets are good. And the reason why I say that is because they have the ability in order to weather storms like this, right? If you've got a business which has a lot of cash on the balance sheet, when there's a recession or when there's a downturn, right? Okay, so the stock price will come off. Everyone's stock price is essentially coming off in some way or another. But they've got the ability to ride that cycle and come out of it, because they're not really in the hands of a bank or the hands of someone who's lending you money. They've got net cash to really survive, right? So essentially just like quality companies, they call it. So quality companies who can really weather storms and weather these cycles. They're the sort of businesses you should really look at.
And what I'm hearing too is, if you don't have the experience, focus on index funds. But if you are then looking to potentially go for one or two stocks, it's focusing on particular areas, and it is higher risk if you don't have that experience. But if you've got a bit of experience, again, just do the research in the company, finding out the management of the company. Look at the ASX, look at their financials. I mean, if you've got experience looking at their financials, look at their balance sheets, review those, review the announcements to market. What are they saying? How regularly are they notifying their shareholders of different changes? And get a feel. If you know, like, and trust that business, then it may well be a business that you want to invest in. But again, be careful and get some financial advice.
And look for, I really like businesses that essentially have like a moat in a way, right? So they're in an industry, or they're playing in a field where maybe they're the top one or two of the market leaders in that field, and they've essentially built this moat. And there's a lot of ways, obviously, you can build a moat. You can be a cost leader, you can be a differentiator, all that sort of stuff, right? But look for businesses like that. Look at, like, I don't know, Sydney Airport. You know what I mean? At the end of the day, when this is all over, people are going to start flying again. Like, Sydney Airport isn't going to go
So, dude,
tomorrow.
Is that a hot tip there? Was that?
But, well, I mean, I'm not invested in Sydney Airport. I'm not, but companies like that, right? I mean, it's just logical. It's kind of like, well, okay, so it got crushed a bit, and no one's going to be flying anytime soon. But when this is over, people are going to fly again, and where are they going to fly from? Sydney Airport. You know what I mean? So it's probably a safer bet to go into it now for the long term. That is, right. So, by the way, if you think that you're going to put money into a stock now, and then 3 weeks later or a month later, you're going to triple your money, you're kidding yourself. That's called gambling.
I think it's a perfect way of putting it.
That's gambling.
Like, you may as well go put $10,000 on red at the start. Like, it's
100%. Yeah, that is
the same thing.
That's not investing. That's gambling. So you always have to have a longer term view on this, unless you're a day trader. Then that's another story, right? If you're a day trader, you're just sort of trading the market fluctuations. So quality businesses that have like a moat, like that Sydney Airport analogy, and that's not my hot tip, by the way, but that is a business which is interesting.
Of course, because there are plenty of opportunities, right? A lot of people can think that, and they can think that, oh, look, travel companies have gone down. You look at WebJet and Flight Centre, they've been smashed. People are going to travel. It's a great time to jump in. There are still other factors to consider. And you mentioned cash position. A lot of these companies are borrowing now to I guess, rescue their, position. So there are other factors. Don't just treat that as like, people are going to travel, we're going to make lots of money. There are so many factors when it comes to the market. So again, get the advice you need.
And if you're not in a position where you can literally sit down and analyze a business's balance sheet and management team, all that sort of stuff, outsource it to someone who can. You know what I mean? Go to a financial planner. You know what I mean? Or get an index fund, get an ETF fund. Like, then you don't have to really worry about the
and all their advice would be similar. It's long-term investment. Right.
That's exactly right. Always think of long-term, or whatever your time horizon is. For me, I can invest in small cap stocks or specky stocks. Right, I've got some specky stocks in there, and that's fine because I can stomach that because my time horizon is very long.
Yeah, you just want to make that quick dollar.
I wish, man. I wish. But I've got a very long time horizon. But if you're 60 plus, right, you don't have the time horizon that I have. So you may not want to go into that. You probably start looking at higher dividend yielding stocks, right? So maybe ASX top 20 stocks, those sort of businesses, which there's nothing wrong with them.
So we're already delving into a couple of companies here. I'm going to be cheeky. Like, what's one of your hot tips right now?
Well, again, it's not advice, but I've been following Afterpay for a long time. It hit like a high of 40 something bucks. Last year, I think it hit something 40 something bucks. A few weeks ago, a month ago, it dropped to about $9 or something like that. When I looked at it, I think it even got to maybe $8 or something like that. And I remember saying, telling a few sort of colleagues and investment professionals that, mate, if it hits 9, you got to buy that for sure. Because I still believe in the story, and the ticker is actually APT, Afterpay, ATP or APT, one of them. Anyway, and it's a contentious stock because there's a lot of non-believers as well out there, because it's this new business. Is it a lender? Is it a payments business? Like, you know what I mean? They've had a few regulatory or legislative issues because the government is still trying to figure out whether they're actually a lender and do they fall under different regulations than a fintech business, right? However, at the end of the day, Afterpay in a way has this moat, which I call it, right? Because you got to think, when it doesn't matter what the payment system is, when a millennial, anyone goes online and they want to break up their payments, they go, I'll just Afterpay it. They may actually not have been using Afterpay. Have you noticed that? Like, it's going Afterpay. Into people's psychology. It's just it. It's Afterpay, right? And the payments industry is exploding. It's a big industry. We already know it's a multi-billion-dollar industry.
People are moving away from credit cards and now just going into what's easier.
But this is where the issue, because people, compare. Is it a credit card? Are they loaded? You know what I mean? So that's where it is. However, saying that, I mean, right now it's sitting at $29 as today.
I can assure you, I never got the phone call as a friend of Eti's. Never told me to invest. So it's funny, right? I mean, like a month ago it was sitting about $9. It's sitting now at $29. Right, in a few weeks. Saying that, I don't know, next week it'll go down, right? Because who knows what's happening. But those sort of businesses, I mean, it's got a bit of debt on the balance sheet as well, but it's just the rate of customer acquisition for them is so fast. It's massive, and I think it sort of got dislocated at the end of March, or end of Feb, start of March. Because number one, they had this issue in the US with the government. They had to pay money back to customers, but also number two, retail expenditure. Right, when everything closed, people were like, oh well, they're not going to use it. But now people are thinking, hold on a second, people are still sort of using Afterpay. They're just using it at home and they're getting it delivered. So uptick again. It's an interesting space. We could talk to Eti forever on investment, but we're going to have to cut it there. But I can't, again, let you leave without Confio confession.
Oh, right.
Last time you told us that you were an Australian soccer player, football, the world game.
Yeah, that's it.
Tell us something else about you that we don't know.
I have a weird obsession with Russian politics.
Right. Okay.
Yes.
Vladimir Putin over here.
Yeah, love him or hate him. I guess most people might say hate him because... Anyway, I'm not even going to go into the comment on that, but I find it just incredibly fascinating how, especially the post-Soviet formation of the Kremlin has formed, and how Putin has obviously taken a big role in that. I mean, the way he has moved around the world is just unbelievable.
It's definitely
he's done some scary stuff. He's done some incredibly, in my opinion, bad stuff, but it is what it is. I still find it interesting. I don't know what it is about the Kremlin and Russian politics, but for some reason...
Well, there you go, guys. You've heard it here first from Eti. He's given us hot tips of recommendations on where to invest our money, Russian politics. If you want to talk about any of those topics with either Eti or myself, feel free to reach out. Today's topic, again, was just about investing and taking advantage of the opportunity on the back of COVID-19. Do you invest? Do you not invest? Again, feel free to reach out to the both of us. We're here to really help our community. So,
of course,
feel free to reach out. We'll probably get Eti back on the show, talk to us about his Suits and Kicks podcast. But for now, that's it. Thank you for tuning in to Coffee with Confio.
Thank you.